Markets are acting, yeah. Yeah, the good news is bond yields are dropping drastically this morning. And maybe that's the impact of all of this news that we're seeing about Doge and Elon Musk in Washington. And maybe they're beginning to believe that this is really going to happen as the various departments are closed up completely. Some of it, there's some question about the legality of this being done by executive order or by just executive decision. So Congress is going to have to act. We will see whether the Republicans step up and confirm and make permanent what Doge and the Trump administration have been doing. Now, remember, Doge can't do anything. All they can do is recommend. But what I'm saying is the recommendations have been made. The executive branch has continued with those directions. I agree that there's questionable a bunch of questions with regard to spending the money and the U.S. government being able to just make a decision not to spend money or not to do what Congress has told them to do. But again, now it'll be up to the Congress in many cases to confirm what's been happening. It's super interesting, I have to tell you that. But the bond market is responding finally to all this activity or something, but that seems to be maybe what's happening this morning. In the meantime, Alphabet and AMD had less than happy earnings reports, and the market is taking down the tech area because of that. Not all of it. Nvidia up a little bit. There's a little bit mixed bag going on in that area. But the overall impact this morning on Tesla is that it's down. And that could be partially an Elon Musk story. In other words, all of this activity that he's doing, which is getting a whole bunch of folks to shout his name in negative ways, could be having an impact on the stock this morning. But we're still talking over 380 and 382, something like that this morning. We'll see what happens as the day progresses and maybe maybe the buyers come back in. We'll see. We'll see what happens. All right. Let's start off with some really good news. We've got Cathie Wood's ARK Invest. She now believes, she and her group, they're very proud of their new report, that robotaxi rides will be at 25 cents a mile by 2030, which will mean we won't own a car at this house. Okay. It could be more than that. We still won't own a car. Robotaxi rides will be at 25 cents a mile by 2030, displacing a huge percent of all personal auto use. It will reduce some air travel, and it will also be, eating into public transport. People will not take a bus or a subway if they can get into a beautiful private car and get there for 25 cents a mile. It's just not going to happen. So they're suggesting that this will total about 30 trillion miles, and these are just in the Western nations. This doesn't count China, doesn't count India, doesn't count other second and third world countries. And at 30 trillion miles at 25 cents, 8 trillion or so in revenue. ARK believes that it's likely that Tesla will stop selling cars for other than robotaxi purposes, and that they might even own a huge percentage of that fleet. Her belief is that Tesla will end up with about half of that business. That will have an enterprise, the total enterprise value, they believe, for all robotaxi business will be 34 trillion. She believes that Tesla will end up with about 17 trillion of that. Then I'll cut that in half and I'll say maybe it's 7 trillion. That'll be okay. But remember, Tesla will have some business in China and some in India and other non-Western nations. They may also be generating revenue for other aspects of those cars, like entertainment in the cars or advertising in the cars, special use vehicles that'll charge more, upgraded cars, like the black Uber cars or whatever. Seems to me that this is a very good report, and the stock should be up based on this report. If you take a current valuation of even my number, 7 trillion, which would be $2,000 a share. If you take that $2,000 a share and you bring it back to present value, only 5 years of reduction, you'd be way above $380 a share. Anyway, the world's richest man, Elon Musk, will make his case this week about the benefits of government spending cuts before a JP Morgan Chase audience that will include the CEO, Jamie Dimon. Musk referenced this appearance on his social media platform on X Sunday night. Says, I'm giving a talk later this week with JP Morgan Chase and Jamie Dimon, and I will obviously be a financial audience. And really just to say, look, if you are shorting bonds, I think you're on the wrong side of the bet. So do you think something like this could be impacting those bond prices this morning? Okay, this is what Musk said in his X post. The bond markets don't currently reflect the savings that we are confident we can achieve. Musk, what have I been saying? What have I been talking about here? Musk will make his appearance at a private JP Morgan event that Dimon is attending, according to a person familiar with the event. JP Morgan is a major participant in the U.S. Treasury market. Yeah, we know that. The JP talks come as Musk, the man in charge of the Trump administration's newly formed Department of Government Efficiency, is working quickly to restructure or even shut down various government agencies like USAID, including, yeah, that they just said that. The legal ramifications of sweeping actions are unclear, as I just mentioned. As part of those efforts, Doge has gained access to the Treasury Department's payment system. And over the weekend, Musk said that Doge is shutting down some Treasury payments in an effort to root out corruption and waste. Now, remember, when he says this is where I get a little bit upset with him. Don't say Doge is doing it. Doge is identifying the things, and then the executive branch is executing on some of those recommendations. He says there will be less debt needed as we stop wasting taxpayer money on crazy things, Musk said. Of course, Elon is also making lots of news in Washington, D.C., where his goal is to chop the federal deficit in half, or about $1 trillion a year. He then believes that this will stimulate secular growth, resulting in more money coming into the Treasury from taxes. That will cut inflation beneath the hoped for 2%. Basically, the Fed will not be able to get inflation back up to 2%. Remember, that's how it was in the first Trump administration. The Fed is like, how do we get back up to 2% inflation? We want it to be 2%. So we'll get back to that situation where we're fighting to get it back to 2%. Well, interest rates will then fall to maybe 4 or 5% for mortgages and 5 or 6% on car loans, maybe even lower than that, as we saw in the last Trump administration. So while Elon's motives are pure in terms of wanting to make America great again by getting rid of all this ridiculous, wasteful spending and getting rid of the fraud and corruption, the result is going to be good for Tesla as we have a robust business climate and lower interest rates. This is Randy Kirk. Please hit like, please hit subscribe, please hit notify. Later on today, we're going to be having, of course, as always, we'll have Jeff Lutz on around 5 o'clock. And then later in the evening at about 7:45, it'll be Brian Wang. And Brian will bring us his latest understanding of where Tesla is in terms of the technical side, the charts. What are the charts saying? And we'll talk about other things as well, as usual, with Brian, who has a very, very, usually a very interesting take on lots of things. Maybe we'll talk about more of the Cathie Wood results, which she includes not just Robotaxi, but also the Optimus bots as well. Okay, then and then Market Watch. All right, these are the reports coming in this morning. The first report this morning is the U.S. businesses created a solid 183 new jobs according to ADP, 183 this last month. That was higher than what was expected. Apparently, the cooling labor market has plenty of mojo, it says here. Economists polled by the Wall Street Journal had expected 150. We got 183,000. So ADP reported a revised, this is very interesting. I've never seen ADP with this larger revision before, revised from 122 last month to 176. It's a massive revision. And that's, again, unusual for ADP. The economy, they said, appears to be adding enough jobs to keep U.S. employment rates low and stable at around 4%. Hiring has slowed since last year, but most Americans who want a job can find one, and layoffs are very low. Now, remember, ADP is not even a very good forecaster for the U.S. government jobs report out on Friday, but it's a useful additional piece of information. Now, this jobs report didn't impact the stock market at all this morning. It stayed down after this report came out. Reuters says the number of U.S. businesses, U.S. businesses created a solid 183,000. What? What happened here? Oh no. Oh no. Sorry. You're going to be missing one report because I copied and pasted the wrong thing. All right, let's go on to this is just out. Services PMI in the United States decreased to 52.9 points in January from 56.8. Now, that's a big decrease. Services PMI in the United States averaged at 53.85 all of 25, from 2013 to 25. And, it's been as high as 70.4, but this month, January, they're showing it went down. Now, turn right around. Now, here's the ISM Services Index for January. In January, the Services PMI registers 52.8%, 1.2 percentages lower than the seasonally adjusted December figure of 54%. So showing services down in both reports. But the Business Activity Index registered 54.5, which was, I'm sorry, after seasonal adjustments, let me do it again. The Business Activity Index registered 54.5% in January, and that was 3.5% lower than the 58% in December. After seasonal adjustments, this is the 56th consecutive month of expansion. Okay, this is where I get so confused on reading these reports. In January, Services PMI registered, but it's expansion. It's over 50. All right. So, continued expansion, just not as much. The new orders index recorded a reading of 51.3%, which is over 50%. So that's expanding. Employment index remained in expansion territory, again at 52.3. So all four indices remain in expansion territory, even though they were less than in December. All right. So that's the reporting that came out this morning. And the other report that came out, I remember now what that was. That was the deficit, the trade deficit, and the trade deficit was at a record high, highest ever. They're suggesting that it was a special situation because people were trying to buy more product, import more product ahead of possible tariffs. That would have been a wise thing to do, apparently, based on the fact that tariffs have now been put in place. So anyway, that was the other report out this morning. Now, again, none of this seemed to be impacting the market. And now we'll take a look and see where markets are after all of those things. But again, we're looking to see, as we can see here, the Dow is down 18. I mean, it's flat. The NASDAQ's down 125. That's a little less flat, but it's not really a huge move. And that's probably Alphabet and AMD's bad earnings results. We'll take a look here in just a second. S&P down 15.51. I mean, all of these are down very, very small amounts. Let's look at the percentages. We've got Dow down 0.02, the NASDAQ down 0.61, S&P down 0.26. Then we get to Tesla, which is now down, sorry, down $10.44. It's been just kind of steadily going down all morning, still at 381.77. Remember, 380 being kind of a floor. That's my floor. It doesn't have to be everybody's floor, but that's my floor. Anyway, down 10.44. Apple down 3.57. Google down 17. That they had the bad earnings. Amazon down 4.70, 4.89. Meta is up a little, up 7, and Microsoft down 0.9. NVIDIA up 3.47, but NVIDIA coming off a very low number, very low stock price. So, kind of a mixed bag. But then you go down to Cathie Wood stocks. This is why I like to do it. All the Cathie Woods are up. Now, part of that is, she made a bunch of money yesterday on Palantir, but now she's losing a bunch on Tesla. So anyway, but just all the Cathie Woods, TDOC is up, CRISPR is up, ARCG is up, PayPal is up, Square is up, and PayPal, by the way, was down a bunch yesterday because of their bad earnings, but now they're back up again this morning. So very unusual, kind of weird market. In fact, the Dow just went into positive territory. up $3.55 or $3.55. All right, let's go ahead and take a look at the bonds, which may be having some impact on all of this. Last I checked, the bonds were well down, and they continue. These yields are down 8.3 basis points. We have cracked 4.5. We're now at 4.43. The next, okay, remember, these are my breaks, and they're just psychological. So the next one will be 4.25. That's the next one we'll be looking to try to break through. The 2-year is down 0.4 of a basis point, and the 1 month is down 0.6 of a basis point. I'm sorry, the 2-year is down 4 basis points. The 1 month is down 0.6 of a basis point. The oil numbers down again. We have got down $1.15 at 71.53 for the Texas Intermediate. Similar amount for Brent, but it is now $3.50. So no real, but high crude inventories apparently going on this morning. Natural gas continues to go down a little bit, down 0.22% this morning. Gold continues to go higher, 2,898 all-time high, 2,899 even as I sat there, and continuing higher. Silver down a little tiny bit, 0.11% this morning, but still sitting just under 33. Copper up 0.71 at 4.38. So that is a little bit of definitely a move back up after falling 20. I'm incorrect. Wrong concept. Copper, yeah, 433, 435. Yeah, it's right around in its normal area. Okay. We've got the dollar sliding a tiny bit this morning, and we've got the Bitcoin flat down 179 at 98,511. So that is, obviously down from down over 10% from its recent all-time high. All right, then those are the numbers this morning. Let me remind you once again to please hang out today. Hear Jeff Lutz at around 5 o'clock, and then hear from Brian Wang at 7:45. Love to have you hit the like button, subscribe button, and notify button, and then join Patreon. That would be phenomenal. Oh, one more time on Tesla. Is it changing? Yes, it's continuing down. Now down $11 at 381.13. It'll be interesting to see if we take a big bounce off the 380. All right. I think that's all I've got for you this morning, unless you can remember. Oh, last night. Yeah. Brian White. We actually had 2 Brian Whites yesterday. I'll put both cards up. So we had a Brian White where we talked about this is important. It's a big discussion this morning. Gary Black, taking a lot of credit this morning for recognizing that more than one company might solve FSD. Brian White reporting on that. And then there's another report that we did later where we talked more in general about various aspects of, as he always does, he's got inside information like on what's happening with semi or something like that. I'll put both cards up. That's finally it. That's all I've got. It's been great talking to you.